Hey, what's up everyone? Levi Spade back here again with more videos on simplifying investing principles and concepts. So today I wanted to talk about corporate bonds and what those are. For the longest time it didn't make sense to me and I didn't really understand what the interest rate part of it meant. And so let's quickly break down what that is. Each corporation has the ability to issue bonds to investors, and what happens is there's a rating associated with that. And so if a corporate rating bond degrades over time, then all of a sudden they're viewed as junk bonds and really bad for the business, and all of a sudden you start to see their stock price and the shares slide in performance. And so you can view corporate bonds like credit cards. We all know those hated, dreaded credit cards and how bad they can be for us. And it's the same with a corporation. We have to make sure to use them wisely and be able to leverage them appropriately in our own lives as retail investors, and make sure that it can be advantageous to go out and buy something big and then make small payments towards it. And life happens and sometimes unexpected expenses come up or we forget. And so that's the same thing with big corporations. Sometimes life happens and they miss one or two payments, or all of a sudden the interest rate for the corporate bond goes up, or they get degraded to a lower rating, and all of a sudden investors think, their bonds aren't as attractive anymore and they're not doing so well. All of their earnings are going towards these payments for their long-term debts. And all of a sudden the competitors come along and really get ahead of them in the game when it comes to producing products, providing services, and really looking good compared to the rest of the pool of companies in that industry. So that's just a quick breakdown. I hope it made sense to you. Make sure to check out the Webull link down below. Webull is a really good app, and the reason for that is because you're going to be able to check the long-term debt of a corporation before you invest. And I always encourage you to make sure to always research before you invest. You want to make sure to be diversified. You want to make sure your money is spread across many different corporations. In case one of them manages their bonds poorly, you're not going to be caught with the bag and having to lose money in the long run. Alright? So make sure to check out the link. Their app is very visually appealing. It's very easy to scroll down and see the different fundamentals of a stock and what their long-term performance has been. So you're going to be able to get up to $1,600 in free stocks when you invest $100 or more into the Webull account that you start. And you will find that it is really easy to do. The setup process is very quick, and you're going to be able to simply begin investing there if that's something you're looking to do. And what I recommend is to just take a small amount each month or every 2 weeks, and I'm talking like $10, $20, $40. It doesn't have to be your whole paycheck or the stimulus money. It's better that you just consistently each week or each month invest towards your portfolio. And the other great part about the strategy is that you're always going to have some money to put towards it. You don't want to put all of your money right into the stock market all at once, because you know what, then you may change your mind or things may change in the future. Alright, the other thing I wanted to talk about was the energy sector. Historically, for the past 5 years, the energy sector hasn't performed so well, say compared to the technology sector or the retail sector, like the Amazons and the Shopifys and the Wayfairs and everything else. So energy sector has really made a strong comeback since last November. And compared to the technology sector, which historically always been the best performing sector in the stock market, energy sector has performed really well, and I'll show you right here. And so you want to maybe begin looking at adding some stocks that are in the energy sector to your portfolio. I think this is a time where technology and the focus of big corporations and even governments are now focused on energy, and how can we leverage the technology and the knowledge we have with the resources we have to power everything that we use. So a lot of renewable energy, a lot of the existing infrastructure we have for, say, like oil and gas, we're all able to now run all of the vehicles and the devices that we use on these different types of energy sources. And so before, technology just hadn't quite caught up yet, and now I think we're at a point where there's been some breakthroughs, such as the battery industry, and now we're able to really take the energy sources we have, and the output is much greater. So some energy companies that you might well know is Exxon, Enphase, Sunworks, different companies like that. SolarEdge is another good one, and these are companies that are really making strides in developments in the energy sector. So I'd encourage you to go look at those companies if you don't already know them. Look at them in the Webull app. I know I mentioned it before. I think that you'll find it's much easier to look at these charts versus TD Ameritrade or Yahoo Finance, where you got to click or tap around a lot, and so you'll find that you can just get in and get out and get on with your life. That's just a little bit about what I've been learning, and I look forward to bringing more videos to you and breaking down other complicated or difficult things that are in investing. And I want to make you guys a confident, competent, smart and investors, and I think that we can all put our money to work and not have to continue the old way of investing. I'll catch you guys in the next video.